The secret to saving money on your taxes in retirement is planning ahead. So whether you have 1 year, 5 years, 10 years or more, it's important to think about what does life look like in retirement and how can you have your cash flows come in the most tax efficient way. So let's go for a walk and talk about this. And these are real dollars. If you can exercise these strategies, if you can plan ahead, you can easily save thousands of dollars. A lot of people will save tens of thousands of dollars, and some people will save hundreds of thousands of dollars. So it's really worth your while. And like I said, the secret is planning ahead and thinking ahead. What are the cash flows that I'm going to need in retirement, and what's the tax flow nature going to be of those cash flows? So let's start off with an example. Let's say that you want to have $100,000 a year in retirement, and I'm just making that number up. And let's say Social Security is going to be $25,000 of that. So right away we have an income stream, Social Security. Is Social Security going to be taxed for you? It might be, right? This is information that you can get at the Social Security website, which is ssa.gov. But when Social Security first came out, it was not taxable. In 1983, the government came up with something where it's called your combined income. And if your combined income was above a certain level, up to 50% of your Social Security payments could be taxed. And I want to make sure this is clear. It's not 50% goes to tax. It's 50% of that cash flow counts as your taxable income, for lack of a better term. And I should say here, I'm not an accountant. These are important enough strategies that you should talk to your accountant. My goal in this video is to put some things on your radar screen that you can look into and say, gee, this sounds interesting. Maybe I should look into this further. And I do recommend you work with an accountant to do that, or a fee-only financial advisor. And then in 1993, they said, oh, you know what? We need more money. So if you make, it's still there. There's still a 50% limit, but above another income level, 85% of your Social Security is going to be taxable. If your combined income's between $32,000 and $44,000, half of your Social Security payments are going to be included in your taxable income. And then if your income's $44,000 above, 85%, right? So knowing where your cash flows is going to come from, boy, if you can keep your combined income under that $44,000 or under $32,000, you could see where you'd save a lot of money right off the bat. And this is just one factor. So another thing to know is, depending on what your taxable income is, when you become Medicare eligible, Medicare A does not have a premium associated with it, but Medicare B does have a premium associated with it. So there's a number of things that can be affected by your cash flows that are coming in, and what is the taxable nature of those tax flows coming in? Where is it coming from? And I'm going to talk a little bit more about that issue in just a minute, but first I also want to share with you dividend payments. If you own stock in a company that issues a qualified dividend, you can look up what qualified is, but it's pretty broad. Most of the S&P 500, in fact I think all of the S&P 500, the companies that pay a dividend there, those are qualified dividends, but you want to look into that for yourself. The tax nature of qualified income, again, is based on your tax bracket. And it's fairly high. I mean, the lowest 3 tax brackets essentially pay no tax on the dividend income that comes in. And for 2022, that was about $45,000. So a person that's single could make $45,000 and not have their dividend income taxed at all. In a married filing jointly, that number goes almost up to $90,000, $89,250. But it shows the importance of knowing where your income streams come from. And so you might be saying, hey, Azul, okay, that's great, but how do I control my income stream, right? Social Security is what Social Security is. Well, if you have time, if you have years before you retire, you can look at your accounts, anything that's in a regular IRA or a regular 401k. As you take that money, that's all going to be taxable income. So in my example, where somebody's getting $25,000, they want $100,000, a fourth of that, $25,000, is coming from Social Security. Well, if all of the rest comes from a 401k, everything that comes out of that is going to be taxed as ordinary income. So the nice news is when you put your money into your 401k, when you put your money into your regular IRA, that was in pre-tax dollars, but now it's time to pay the government. It's literally time to pay the tax man. And when everything you take out becomes taxable income, and you can contrast that with a Roth IRA or a Roth 401k where you did not get a tax break for the money that you put in, but then that money grows tax-free, and when you take it out, it's tax-free. So you can see, if you're taking that $75,000 out of your Roth IRA, the way your Social Security is going to be taxed can be different. So you've got the Tax Me Later account, which is the regular and the traditional IRA and the traditional 401k. You have the don't give me a tax break today, but never tax me again, hopefully, with a Roth IRA or a Roth 401k. And then you have your regular taxable account where you're paying tax as you go. So let's say you have $100,000 at the local bank. Well, let's say you're getting $3,000 of interest a year on that. The $3,000 is going to be taxed as ordinary income, but your $100,000 it's not growing tax-free. You didn't get a tax break when you put it in. So if, in this case, if you needed $75,000 to live on and you took that out of your bank account, then the way your Social Security would be taxed, those calculations would look different. So that's the concept. It really does matter. Like I said, you can save thousands of dollars a year I call this the 3-bucket strategy. You can save real money, thousands of dollars a year, tens of thousands of dollars a year, and maybe even potentially for the right person, hundreds of thousands of dollars a year, not just with this strategy, but by thinking through ahead of time where your income streams are going to come in. For instance, I'm not a real estate specialist, but people that do real estate can have very tax advantage cash flow streams in retirement. And that can add up to hundreds of thousands of dollars saved during a 30-year retirement. And if you found this video helpful, I know you're going to find this video over here helpful, which talks about the 5 reasons to retire as soon as you can, or this video up here, which talks about the average income in retirement for an American. Thanks for watching. As the kids say, thumbs for likes, subs for love. If you're enjoying the channel, consider subscribing and leave me a comment. I really do enjoy reading them. Bye-bye. Question I get asked fairly frequently is, hey Azul, how do I compare to my peers? How do my retirement balances compare? How does my net worth compare? What are my projections for retirement income? How does that compare to other people? And particularly as they get close to retirement, right? So let's go for a walk and I'll share some numbers with you that I think you'll find interesting.